Hi everyone, welcome to a new episode of the Outlier podcast. I've got Roger with me. Hi Roger, how are you doing?
I'm doing great. How are you doing?
Roger, can't complain. 2 days of LA meeting credit union. It's been crazy. Again, very amazing, I would say. Meeting credit union is always fun. And I was waiting to record this interview, everyone. At least 3 to 4 months to get a slot in Roger's calendar. He's really busy. Roger, firstly, thank you for accommodating this slot in your calendar. We really appreciate it.
Well, thank you for having me. I appreciate it.
Absolutely. Quick introduction, but I know I won't do a good enough job because of Roger's illustrious career in credit unions. I think Roger, this is your fifth or sixth credit union, right? If I'm not wrong, out of your journey. Roger has spent almost, I would say, more than 3 decades in the credit union movement. Roger is a CEO of Nuvision Credit Union based in around LA itself. Roger, I don't want to, butcher your introduction. Why don't you go ahead and talk about your journey a bit very quickly with my audience?
Sure. Well, I have been in the credit union industry really my entire, professional career and somewhat by accident in the sense that my original career interest originally and what I thought I was going to do was actually more in technology. I was kind of between computer science and management information systems, and I ultimately chose the management information system side of educational route for my first undergrad. And I needed a job during college, and I happened to get a role in IT at the Golden One Credit Union up in Sacramento, California, more Northern California. And that kind of started my path into credit unions. At that point, I really didn't know much about credit unions. My mother was a member. I knew that much. And so I had a great experience there at the Golden One. And ultimately, I could go through, but as you said, there's a lot of years to go through. Ultimately, I pursued the career in credit unions and first in finance, then at a fairly early in my career as a CEO of a smaller credit union. And then I was able to, go to some other CO roles at progressively larger credit unions. And now I'm really pleased to say that I've been at Nuvision for over 20 years and just having a great experience here. We've got a great team here, work for a great board, and it's been quite a journey. But I have been, my entire career professionally has been in the credit union movement.
Absolutely. I mean, that's what I think connects both of us. Same. I'm a computer science engineer who spent like almost years and years doing non-credit union work, right? I worked with the Fortune 500s and then moved to banks. But again, then fell in love with credit unions and been over here for the last couple of years. There's a lot to learn from you, Roger. So let's start with your experiences, right? So the first question is, what experiences actually shaped your leadership philosophy, right? And how do you balance, I would say, the vision with the day-to-day execution? Because marrying both of them is really important for running successfully a credit union.
Yeah, so I think what comes to mind for me in terms of what shaped the leadership, approach, philosophy, it's really all of my experiences professionally. And also it's like in what all the experiences, not always all of them were positive. Some of them were actually negative experience, which I think is all a gift. I may have not felt like that at the moment or in the moment, but I think they're all gifts, of learnings along the way. And I think part of my leadership philosophy too is, and this very much includes me, including today, that we all have something more to learn, that we're all in development if we're open to that and can get better. And so that's part of my leadership philosophy. And I think that's partly because I've just seen that as a way to remain relevant, to remain adaptable. And I've probably seen some opposite where I saw people, talk so much about the growth mindset. I've really, great book on that, I've really tried to embrace that because I've seen a lot of change in the industry, and I found that's a way to continually adapt. Plus, I'm generally curious and like to learn. But I mean, I think the other thing that I've seen in my career, I went from very technical. When I was at the Golden One Credit Union, I was like the lowest person on the totem pole. In fact, I was the first microcomputer specialist at the Golden One. And they never had that position because in the late 80s, there weren't computers on desks. That was not common. There was a lot more terminals, more executives. So I learned a lot about how people treated other people. I'm like the lowest person, and I had so many leaders there at the Golden One who treated me so kind and were really great mentors to me and were helpful. And so that always really resonated with me. Stan Holland was the CEO at the time, and many other executives were there at the time. Always resonated about how you treat people, regardless of their role, is very important. I also saw some individuals in my career who did the opposite. It was all about titles and kind of like, you have to come through me versus kind of having more open transparent communication. And I realized I didn't see that as being nearly as effective. So again, a gift of what not to do and a gift of what to do. I think the other thing, and I can go deeper, but I'll just keep it brief, that I've learned a lot is how to scale. So I've scaled in my career going from, well, I was in a very narrow, more technical role out of the Golden One. And then my first credit union CEO I think it was a $75 million credit union. And then I moved up. Nuvision, just for reference, is 3.9 billion, just under 4 billion today. So learning how to scale as you get to different organizations and how you lead differently, delegation, how to develop trust and really develop a leadership team, a diverse leadership team, really brings strength. And how that is such a great opportunity, and just how important what I call here at Nuvision the teamwork superpower is, and how powerful it can be to help serving your members and achieving just great things. So that's what comes to mind when I think about like leadership philosophy, and a lot of that I left out, but just high level. Some of the balance of vision and day to day. I think it's always good to know where you're pointing, and we've got various plans and such, but so much I think is about what actually gets done. What are you able to execute? And coming back to that teamwork superpower that I talk about often, because I'm so proud of our new team here at Nuvision, is that it really is, are people aligned? Are we going the same direction? Because we can get so much further together. And so I think understanding the vision, not only what it is, where we're going, why we're going there, but also really trying to help people understand their part in this journey and how we are depending on them for their help, and they can depend on each other, myself included, on supporting us to get there. And it's about collaboration, it's about communication, and it's also about dealing with things when they go well, and inevitably when you get the curveballs, and how you adapt, how you react, and keep going. Those are the things. So I think that's where the day-to-day execution, because you make a plan and life happens. I think it's a phrase. And I've seen that in my career so often, is that, great plans are great. That's wonderful. But they rarely are reality in terms of like the exact tactics and such. So you've always got to be adaptable and such. So I've just, learned that that's the reality, and that's okay. And really, I think a big part of being an effective leader and really being an effective team is how you react, how you adapt, and how you achieve goals in spite of circumstances, at least in the most case. So that's what comes to mind when I hear your questions.
That's a very well summed up answer, right? It's very rare for me to get that well summed up answer. That's great, right? Let's move on to talking about the genesis of the podcast, where we want to honor outliers, right? Your journey has been, Roger, nothing short of being an outlier, right? Starting as a computer programmer in Golden One, and then moving up to becoming CEO of a 4 billion credit union. So my question is, how does an outlier mean to you as a leader? Because for me, definition of outlier is something, for you it's different. And how has Nuvision embraced that mindset in serving its members? Because I think of you as an outlier.
Well, I appreciate the question, and even with the invite, I remember when you invited me and had to pursue me a bit. I remember thinking, am I really an outlier? Do I belong on this podcast? I didn't necessarily think of myself that way, but I actually view it as a compliment, because I do When I think about outliers, partly I think of not accepting the status quo. It's about
Yeah.
being open to possibilities, which, requires your curiosity. And I think for me, this might be, what is it? Was it Andy Grove at Intel, said, about the whole, paranoid, being paranoid is a way to keep you on. I've never been too comfortable, trying to never get too comfortable. And I would say, that might be an example of what not to do if you do it all the time. But I think it's also an example. I don't care, some people say, well, I wanted this role. I wanted, some achievement, and that's great. I think it's good to celebrate and not miss celebrating key achievements, meeting my milestones. But I've also believed in that it's really important to never get too comfortable. In my view, I need to continually earn the right to serve, to be able to continue to serve in my role. No one's told me that, but I've always felt that way. I need to continue to be worthy of the role that's been given to me. So I generally think about that because I'm always thinking about to remain, how do we position the credit union to be relevant to our members? Members and member preferences are continuing to change. What member experience is for members today is very different than it was, say, 20 years ago, because consumer expectations are so much different. So we've got to really make sure we are not too comfortable in, well, this is how we do things, and that if that would prevent us from changing and evolving to make sure we're staying relevant to the members want us to do for them and the way they want us to do it in terms of products and services and the member experience, say digital, for example. So I think, when I think about outliers, Nuvision, I think there's a lot of great credit unions doing so many wonderful things out there. So, I'm humble myself as a leader. There's a lot of CEOs doing, I think, more exciting things than I do. But, there's some things I think that maybe we do differently. We've done a number of merger partnerships. It's been part of our growth path. Those have included out-of-state partnerships. And I know we've heard about them more in recent years that others are doing this, but we started that in 2017. We were doing a remote workforce that wasn't even in the same state since 2017, and we accelerated pre-COVID and continued pre-COVID. We continued to be a remote first environment and very flexible. We think that's where the work environment is going and is. And we've embraced it. And so I think that's different. We operate in 5 different states, I'd say, and we are not, I would say I've never been, and I don't mean to critique anyone, headquarters centric. And like it's a functional headquarters, but it's not the $3 billion Chase building, which I'm sure is beautiful, that Jeannie's got there, but it's functional. I'd say we're more market focused. Member and market focused is what I think about being, put the money and the branches and other things where the members are. So we, operate in 5 different states, and we really try to be unique, be market appropriate in those different states. Alaska is very different than, say, Southern California. Like Wasilla, Alaska, it's a very different community than Orange County, California. I think you said you're in Huntington Beach, which is in Orange County, south of LA, for those who might not know. So I think about, all of, those things just being some examples, how we operate differently. I think for us, like many credit unions, we started was like a single employer. This is our 90th year. 2025 is Nuvision's 90th anniversary. We started out serving Douglas Aircraft. And we were with the aerospace industry. And as things evolved over time, like when I was coming in roughly 20 years ago, the aerospace industry in Southern California had already peaked. So we needed to evolve. And I think being an outlier to me means you're willing to change. You're willing to try different things. Not because you expect everything you try to be successful, but you're willing to strive because you want to be relevant. You want to be relevant to your members, and you want to provide them the best experience and products and services possible. So in that regard, I suspect that some would call us an outlier.
Glad that you consider that. So Roger, quick question. So what is your current charter right now? Are you the seg-based or you community-based? What is the strategy going forward?
So we are a federal charter. Federally chartered, federally insured. We have always been more seg-based with associations. And we have stayed with that The entire time I've been here, I've always thought, I primarily worked for federally chartered credit unions. I always thought and continue to feel the federal charter, with the way we, are taking advantage of it in terms of like the flexibility with multiple states, is the most flexible charter we have. And in fact, say in California, for example, there's been a number of state charter credit unions who are converting or have converted to federal charter. I think in part because of some things that are happening in California. Other states have seen that too. But in also part because the federal charter, if you really understand it, I think our regulator has made it, attractive, and it's worked well for us.
Understand. Now, next question is about differentiation, right? I mean, I'm 32, Roger, so I'm largely inclined towards fintechs, right? I'm a huge fan of Chime, SoFi on the other side, looking at Revolut maybe to be my next banking partner. So my question is across differentiation. Now where I'm coming from, that when I talk to any of my friends, right, or rather when they ask me what do I do, I tell I work for credit unions. First question I get, can I even become a member of a credit union? That's the first question every single person outside our ecosystem asks me. That's one. So how do you differentiate and grow in competitive markets where you have the big banks, the fintechs, the neobanks, while maintaining, the legacy of Nuvision, because it's close to 100-year-old legacy. You cannot, we cannot be a bank. You have to be always focused towards member development, member experience, member wellness. So how do you balance and still differentiate in other geographies, in all geographies you operate in?
Yeah, it's a good question. I don't know that all the answers are easy, because I do think it's a challenge competitively. The competitors are quite good. And so I think one of the things I think of is I respect what some of these fintechs and even larger banks are doing. I think it's easy to get in a mode, oh, those big bad banks and all that. I respect what some of the big banks have done, and these fintechs. They have come in and they have made some really great, not only product sets, but especially digital experiences. And I think what I think about, I think you mentioned something about how do you maintain the legacy of like Nuvision? I think was what you said, if I heard you right. I think what I think about the legacy of Nuvision, and I suspect it's for many credit unions, we were there to help our members reach their goals. We're there to help them build their lives. That was true in 1935. That's true in 2025. I think that to me is our legacy, not the how we did it, but the fact that we were doing it. We were partnering with them at critical moments when they needed help, they needed support, and we're there for them to support them. And I think just the tactics and the ways to do that, even though that mission, shall we say, and that legacy of mission is staying the same, how we support them is changing. With technology, there's so many more tools and such. I think so much of it, I think about more broadly is consumer preferences. And you see how consumers want to, purchase whatever they're buying. They're going to Amazon, they're going wherever. And so much of that is coming over into financial services. And the fintechs were just, they went after many times more narrow niches, kind of, they solved problems in a narrow basis. They came up with great solutions quickly. And then they, say like an example, SoFi, then they bought a bank and expanded and, did some and had some fantastic. You talked about like credit unions, not, can I join? Like SoFi and Chime, their marketing costs and growth, the acquisition costs are pretty high, but they got their name out there. There's no question that consumers can do business with them. So for us, I think it's to continue as credit unions. I think about it's partnering with fintechs. Where do they help you deliver the experience where it makes sense? It's all around, can they help you deliver? So it might be some cooperation, some competition. And I think it's like, where can they help you deliver value? Where can they help you deliver experience? I think that's important. We can help differentiate. And I just think we need to continue to think about how do we move more quickly? Because when I think about credit unions, and I'll be the first to say, I don't think I want Nuvision and myself to move more quickly to adapt. We tend to be, a regulated entity. We tend to be, I think, relatively conservative, and I'm talking about myself from a risk profile standpoint. And I think we need to continue to take measured risks and move a little quicker. to make sure we're staying relevant and continue to be able to use the technologies, platforms that are available to us to give our members relevant products and services so that they know we're an option. Because what I worry about, and I think about this a lot, is our best members in terms of engagement today, for those who have kids, which many of them do, will their kids choose us? And I don't assume yes. And some of our research shows it isn't yes yet. So that really drives us. How can we make sure that we are attractive to that next generation, including the kids of our existing members who, intuitively, I think, hey, we have a pretty good chance at them, but it's not a given. What we've learned is we've got to go earn it. We've got to earn the business. We've got to earn the right to remain relevant to this next generation.
Roger, you picked up two very important interesting points. One is agility. Second is generational wealth transfer, right? And this is an actual debatable topic about generational wealth transfer. Whether it's combination of right products or right services, right? Or right experience. Like three of them: product, services, experience. What should we fix right in order to make the next generation, the kids coming to us, right? So what is your 2 cents on that?
Well, you said product, experience. What was the third?
And service.
And services. So I think for me, because some of those services I might put with product, I don't know, it depends. I think about, for me, more about experience, because I feel like that's a wrapper around products and services as well in many examples. And I think the thing is, like, and I'm including Nuvision in some parts of this. What we're really trying to, one of the things I talk to the team about is because when I say team, I mean our employees, our team members. We know a lot, and whether we realize it or not, we know a lot about how the Nuvision works today. And what I talk to the team a lot is, let's have an outside-in perspective. Let's imagine we didn't work here. You're outside. You're an existing member, or you're a non-member who might consider joining. So what would be their viewpoint? What information is available to them? How do we educate them? How are we marketing to them? And then bring it in, that way, just to have that different point of view. And I think for many, not all, because financial services still has, even today, it's getting less, but has a lot of what I'd say inertia. If you've got somebody, in many instances, you've got to really do something wrong to get it wrong for them to move everything. But it's getting easier these days, and there's many who they may not close their account, but they'll start to move their business quietly. So you've just got to really, so you got to pay attention, not take it for granted. Back to not be too comfortable, what I said earlier. And I think so many times when I think about experience, I think because, like, for us, if there's things that we don't offer through digital, and we don't offer it after hours, after office hours, that is, many consumers today, that's not going to work for them. We've got to have more of our services. Not only would I say services, I don't know, it's a card control, or hey, I'm going to be going to Europe on these dates. I want to do that in the app. We all know there's some members who would never even use the app. We have over 200,000 members. We have some of them who will only work at a branch. We have others who, if you don't allow me to do it in the app, the digital browser based online banking, then I'm not going to do it. But what I think about is there's still gaps we have in terms of what we allow our members to do, and literally what time of day they can do it. And too much of it is what I'd say more batch oriented or lag. It's not real time. And more of consumer expectations, I believe, based on research, and you just look what they can do with Amazon and so many others and some of these fintech you mentioned, some of these other providers, it is real time, it is quick, it is responsive, and they can do it anytime they want. That's what we're driving toward. And we can't do it all overnight. We know we can't do that, but we've got to make progress there. And we've got to get progress in the areas that we think matters most to our consumer, our members. And that's what we're trying to do to remain competitive, remain relevant, and again, to attract, not only keep who we have, but attract, additional new members who are coming up in this next generation.
So you touched upon 2 points that are very near and dear to me, right? One, you talked about a facility of doing travel notification in your app, right? My PFI is what I call my checking account, my salary account, right? I'll give an example. This is one of the top 10 banks, right? I was going back to India for a vacation for Navaratri. This bank actually found a trigger that I used their credit card, went to Expedia, bought my tickets back to India and back New York. They actually automatically put a travel notice letting me know that I know that you're traveling and hence we are proactively giving you a service of putting a travel notice. And I was like, wow, that is data. That is trigger. It's not difficult, right? It's very difficult. It's very easy to find out travel plans, your type of spend. So that's one. And second, you talked about is silent attrition, essentially, right? I mean, people are not closing the account, but how do you even identify over a period of time what are the few measures that you would see that whether checking account is decaying to savings account is decaying or the utilization of credit cards is just going down, no one is using it. Tracking all of these, Roger, data is table stakes, right? And that's the reason I was saying something. I feel I have a job for the next decade, for the next century, because that's what I do for a living. So my question is, how is Nuvision using data? I won't talk about AI right now. Using data and analytics to serve members better.
So I think it's great. And that example you gave is great, by the way. And I'll be the first one to say we can't do that today. That would be a gap in our tech stack capabilities today. But I think it's a fantastic example. And in terms of that travel exemption, type example you just gave. So I think, for us, we're it's a work in progress. We do have an analytics team who does a lot of analysis. We do have a fair, and I don't know that I can speak with confidence about all the metrics that we use, but this whole silent attrition issue is something we monitor, among other things. And I think a lot of it is watching balances. It's watching automatic deposits or withdrawals, payments that are coming through. If those start to subside, then those are triggers for us to start looking into that and to re-engage. We have some campaigns we'll run that when we start to, and we've got a particular, I don't know, it's algorithm, if you will, approach where if certain things happen, then we'll run a kind of an activation campaign. And I think the other thing too that we do is really trying to, focus on this voice of the member and complaint issues. And when you have complaints, it's never fun to get a complaint, but it's also an opportunity. And I think the way you respond to something that doesn't go well can make all the difference. In fact, there's some studies out there, they're a bit dated now, where if something went wrong and you fix it well, those particular consumers are, I think the gist of the study was they're actually more loyal than someone who had nothing went wrong. So I think, paying attention to, complaints, and part of that is, again, data. What kind of feedback are we getting? What was the specific issue, and looking for themes so that we can really hey, this is more than just a one-off. We have 36 branch offices. We have a lot of branches for our size, or over 200,000 members. Sometimes without good data management, even data can get siloed, and it's difficult to pull together to try to understand, wait, we had someone else mention this issue. And tie them together to realize actually this is a bigger issue than just one complaint. So I think really this complaint management and what we look at our voice of the member and looking for feedback more holistically, and AI, I know you didn't want to go there fully, but the AI tools are helpful to analyze that data even more so to look for those themes. But so those are all things that we look at. We run a lot of marketing, and we're using data a lot for marketing and kind of next best product and such. So I think that is something that we do a lot of. And I could probably give more examples, but I feel like I have the risk of going too long on this question. So I'll stop there to see if you have any follow-ups.
No, so Roger, this was a very good summed up answer. And we talked about data. So you've already taken the first step towards data-driven decision in your doing next best offer, next best product for your members. And that is table stakes. It's not even a question that whether you should do, right? So that's great. The next talk about is experience, right? Now, all of us have one North Star metric, and that is member experience, right? My question is, what do you see as the next frontier for credit unions while maybe measuring member experience or enhancing member experience? The reason because of which I asked this question to you, a couple of days back, I was having lunch with a chief strategy officer of a $5 billion credit union. I asked this person, how do you measure experience? And there was no clear answer. They were like, we do surveys, NPS, but how do you measure? Do you have a North Star metric? No. So how do you think, what is the next frontier for measuring and enhancing experience?
Yeah, so I mean, I'm not sure I have a great answer on this one. This is one of the ones I'd be open to learning and kind of more curious about. I think the way I think about it, so one, I'm open to learning more because what is the
Absolutely.
frontier? There are options. I think what I think, we do a number of surveys, and part of this is like statistical relevance and significant type things so we do some surveys, we ask a number of questions, I think many credit unions do that. That is part of what we do. I think a lot of what we are, toying with, if you will, is doing some more what I'd say in the moment surveys. There's just even some of the experts who we work with that are a little worried that some of those, like in the moment, like you just did a call or you just did a transaction, they're a little worried they may take away from participation rates in the broader based surveys. So there's a little dilemma there.
Yep.
If we start to get lower participation in those other surveys, then we don't get kind of the sample size we need to get to the confidence level that we're hoping for. But I think more and more what I think about is in terms of, I think so much of member experience, not all, but it's around, it's really what's your digital experience. And I might be a bit of a broken record, but I really think that part of how do you really drive improve digital experience for members, and it is member experience one and the same, is going to be to continue to improve your digital experience. It's not just, it's what functions, what can members do whenever they want to do them online, and how easy it is. I really think what we've seen, even with some digital account opening processes and such over the years, is user interface, user experience design work really makes a big difference in terms of consumer experience. So I think that is going to be absolutely part of how you improve the experience. There's other things I know we're doing. We have a newer phone system, and it's doing a lot on sentiment analysis. Where it can do live, just listening, it can listen to the words and even the tone, as I understand it. We're getting already starting to get some analytics from that. So I think that may be part of part of that frontier, if you will. But I'm not sure what else may be coming. It's kind of, hard to know. I think whatever it is, I think part of it is we need to, continue to make sure there are ways for members to give us feedback. We need to have that data stored in a way that we can analyze and look for trends. And then I also think of just product usage. And even we do this in marketing, but I think we can probably apply it other places. The top of the funnel, let's say it's a new account kind of promotion. Where do they bounce out? What part of the process do they bounce out of? I think analyzing that, there may be other data where we're looking as like, they clearly didn't complete something. So there could be a lot of reasons for that. But I think there might be opportunities to infer, well, maybe something isn't really as clear or as easy from a user experience standpoint as it needs to be. And so maybe that's something we could optimize further. So those are the thoughts. Don't know if I have the perfect answers there, but I'm always open to learning, because I do think that we need to stay focused on, I'm worried about people, that silent attrition, which is why I said, if anything, why am I uncomfortable? Because I don't take our current members for granted. They've got choices every day about whether they do business, and we've got to work to be worthy of earning their business to stay with us. And I'm committed to doing just that, as is our team here at Nuvision.
What do I say? You being so humble and so agile, that what makes this episode so special, Roger, right? You spent more than 3 decades in credit unions, right? There are very less CEOs who are this open to learning a lot new things. I would really appreciate that, your approach towards running the shop, right? That's amazing. First, let me tell you that before I talk about a couple of more questions, right? In the interest of time, Roger, I want to wrap up with a couple of questions. One is, what are the biggest disruptors you are seeing that will shape up the credit union industry in the next few years? If I ask you for 10 years, you will require a crystal ball maybe, and none of us have that, right? So let's talk about a few years maybe. What are your predictions, or what do you think?
In terms of disruptors, you said, right? It was disruptors, right?
Yes.
So, it's hard to know for sure, but I guess I think of what's easiest to see, I don't know if it's accurate, is what we're already seeing, and that maybe, have even a greater impact. I do see, I was around during the Great Recession. So I remember, there's all these things that, the big banks and, kind of critique and all that. They're not trustworthy, but they're actually getting many between the largest banks and the fintechs. You mentioned some earlier. They're getting, based on market data, a lot of market share, especially of the younger consumer. So I have a lot of respect for that. I do worry about that. That's why, I think back to how do we make sure our digital experience is we're continuing. I don't say we're going to even completely close the gap, but we've got to at least stay close from an experience standpoint. You talked about data. I know this is more of your expertise than mine, but I do think we've got to continue to organize data and really leverage AI capabilities. Because partly, when I was talking about earlier that we can't shut off services, or we shouldn't, just because it's past 6 p.m., and with the time zone they're starting, and we don't necessarily have people working for us 24 hours. Maybe we will one day, maybe we won't. We already have people, I think, in 3 different time zones, actually more than that, because we have people who work in about 8 different states. But I really think we need to leverage AI to be able to, in essence, help us serve our members 24/7. So, and these larger institutions and some of these fintechs are absolutely doing just that. So I think, the digital experience, and when I see the competitors, I think that trend continues, which I think it will. That alone is disruptive. I think the other thing that I think about is, I mentioned this before because it's something kind of that outside in point of view that I really think about a lot. Outside in being consumers and consumer preferences, how they buy cars, how they buy homes, how they buy paper towels. And that, so much of that is changing. How many people do you see who are doing pickup orders at Target or Walmart or others, and others are just getting it shipped? A lot is happening in the way consumers acquire stuff. And so I think we really need to just pay attention to that and figure out, where appropriate, where can we have value add? Where can we maybe offer rewards for certain partners? Where can we have value? I think about auto lending. Like many, we do a lot of direct lending, and we have a fairly robust indirect lending business. If members are going less to dealers in time, consumers, how do we make sure we stay part of that purchase decision process and offer value as part of that process if more is happening through digital channels versus at the dealer? So I think about the continued disruptions being, the amplification of what we're seeing at big banks and the great experiences and products and the fintechs, because they're doing some great stuff. So we got to pay attention to that, stay close, and the changes in consumer buying preferences, and really just make sure we can stay relevant. I think that's what comes to mind for me. I think it's really important.
No, I think, Roger, the ecosystem that's changing so fast. One, you talked about picking up order to shipping order. The next phase is agentic commerce, right? I mean, I'll give you one of my examples. I was planning a trip. I was planning this 10 days of travel, right, across 5 different cities. I actually used an agent, right? I used an agent of Expedia, right, to plan my trip, right? To both plan my trip in terms of flight tickets, their price, their time, which hotel should I book. I literally wrote an essay for that. This is how I want my next 10 days to look like. You won't believe me. To give me an itinerary along with options. And obviously, agentic commerce is going one level ahead, that the agent also goes and negotiates between multiple services and gets you the best deal. I didn't go that far yet, but definitely I would say in the next 2 months, I would maybe have an agent that will do the same thing for me. So that's the rate of change at which an average consumer is going now, right?
It is. And that's why I put AI as part of the consumer experience, consumer preferences, because if consumers like you are doing this for travel, they're going to expect us to call things out, whether it be travel exemption on their credit or debit card, when they're traveling, or anything else. They're going to expect us to be able to offer proactive services like that without them even needing to ask for it necessarily. And so, we're going to need to adapt and make sure we can remain relevant to offer those types of services that are relevant to our space.
Absolutely, Roger, absolutely. One last question I want to ask you is, when you look back at your time leading Nuvision, even at Nuvision for more than 2 decades now, right? What impact do you most want to be remembered for? So if there would be a signature of Roger, that this is for what Roger wants to be remembered in Nuvision, what is that?
for me to like come to one, I guess the people who worked with me, both members and members, hey, he was someone who cared. I think if I had to be picked for anything, he cared, and he was authentic in terms of worked really hard. I think about legacy. I think about, did we help members achieve their goals? Did we help them? I was talking to a member just it was last week, when her mother died, and how she was giving me compliments about how our team came in and helped her navigate the various accounts the mom had while she was dealing with grief. So do we come alongside and, help members during their time of need? And if that got attributed to, he emphasized that was important. And so that was part of his legacy. I would be happy with that. That's part of that caring. Team members, they grew, whether they stayed with Nuvision long-term or just for a while, but they were able to grow and learn more and get to their goals. That would be something I'd be happy if I had a small hand in to contribute to them getting where they want to go, because so many people did that for me, in my career. And I think that lastly, the things that come to mind are probably something much more obvious that I'm missing. I should be saying, but just, I would hope to leave, have Nuvision in a place where it had the capabilities for the next set of changes, so we could remain relevant and keep serving members and help them along the way. In other words, positioned for continued success, not just, shall we say, point in time success. So I've got a lot of work to do before I'm ready for that, but that's what I would work toward.
So Roger, I can't tell you how incredibly proud I am to interview a leader who has grown his credit union 6 times. 600 million to around 4 billion. That's a huge feat, and it doesn't matter what world says, but at least remember that this guy on a random podcast told you that I'm really proud of you. What your vision is and what you're doing for Nuvision. This is no fluff, but all reality. We ask uncomfortable questions, crazy questions over here, but I also peel the onion and tell the truth. I'm really proud of you. So Roger, thank you again for taking your time out to do this show with us. I personally really appreciate it.
Well, it's been an honor, and thank you for the kind words. It's very humbling and appreciated. So thank you for the opportunity. It's a great conversation.
Thank you, Roger.